Yesterday, Saturday, I spent 6 hours watching CNBC's telecast of the Berkshire Hathaway annual meeting. That's right, 6 hours. And it actually, I'll share with you the video on YouTube. It was a 7-hour event. I missed the first end of it. But I had some key takeaways. And the key takeaway is my understanding of Berkshire Hathaway. I'll show you in a bit a chart that I've put together where I track their holdings. And what I came to realize is they own about 50 publicly traded stocks and they own about 70 privately owned companies. That's where the money is. That's where the future is. That's what you've got to be conscious of. And that's why you want to own Berkshire Hathaway stock. But there's something going to happen that Warren alluded to that's going to change this picture dramatically and can give you a understanding of what's going to happen. It's not good, it's business defaults, but how you can profit from it. We'll get into that right after I share that this is not financial advice. This is some of the best financial education you're going to get, whether it be from me or Warren Buffett. We'll get right to it.
Best of Us Investors presents Kerry Griegmeyer.
He discloses in there that they are sitting on about $100 billion of cash right now, basically in T-bills and government securities, and he's collecting a good interest on it. But then later in the show, he makes the point that they know that there is going to be some commercial real estate defaults coming quickly, and that there are some companies, good companies, that just have gotten themselves in an over-leveraged position and are going to put their businesses into jeopardy as a result of this over-leveraging, and could go down. And when they go down, they don't have many places they can go for help. And that is literally how, in many cases, that Warren has acquired these 70-some individual businesses, everything from candy stores to Dairy Queen to Allegheny insurance to Pilot gas stations, just a maze of privately owned, well-run businesses that the business owners basically said, hey, we either want out or we need help. And what Warren basically said is there's not many people they can call. You've got a good business. It's producing income, but because you got over-leveraged as a result of what happened with the low interest rates, and now those interest rates are being reset at higher interest rates, and you're in jeopardy. So what do? You go to the bank. Well, the banks aren't lending money anymore. And as Warren says openly, and I want you to see this, there aren't many people you can call. And he said, we are probably one of the few companies you can call, and we're in the business. And he openly says, give us a call. And what is going to happen is well-run businesses that are over-leveraged are going to find themselves in a position of sink or swim, and they'll call Warren, and he'll say, yeah, we've got $100 billion sitting here. We'll come in and we'll buy 80% of your company, and we'll leave your management team in place, but we'll take the burden of financial worries off your plate. Again, they bought Pilot. He goes into some talk about Pilot, and I think he recognized, and I don't think Pilot was in a bad situation. They own a Flying J. They own a number of very nice gas stations. As he said, they own a substantial piece of real estate along many of our interstates. I think they said they own about 650 stations in the U.S. and Canada, and they aren't going to be moving the highways soon, and these are going to be the people who are going to put in the plug-in stations, and they have a tremendous future in front of them, whether you're filling up with oil, with gas, or electricity. But he went in and spent, I think it was something like $26 billion in 2 different purchases, and now owns 80% of Pilot. Well, that same thing is going to escalate as a result of interest rates going up, and well-managed companies that are over-leveraged need a bailout. And there's not many people you can call. He says those words. There's not many people you can call. And then he goes in and he explains how they put basically good managers in place and let them run the companies, whether it's railroads, whether it's Dairy Queen, whether it's the candy company. And he, in his interview that you might have seen when he was in Japan, when he bought, I think it was up to 7.5% in 5 companies over there. We don't run the companies. They're well run. We just come in and take a majority position, as in Pilot, 80% ownership, and let them run the companies and generate money. And as a result of that, as he said in the Japan interview, they have over $100 million every working day showing up at their office that they then need to reallocate. $100 million a day. And that's how they've accumulated this $100 billion that they're ready to invest. So as we go into this commercial real estate crisis, the number of companies that are going to be ringing up Warren and his lieutenants are going to grow. And Warren is going to give them the money they need to run their companies to their most efficient level, and will give that support. Again, he explains, we're just good at what we do. We just look and find companies that are going to be profitable in the future so that we can get those profits and then reallocate those profits in other companies. So I want to show you the chart that I've created, and I use this. It's interactive with Microsoft Charts, and it keeps track for me of his holdings. Your eyes are first going to go to that column that starts with Apple and Chevron and the companies, the publicly traded companies that he owns. But I want you to in fact, let's go to the computer and I'll show it to you and explain it to you in detail. Okay, this is my Berkshire Hathaway spreadsheet. And as you can see, their largest holding is Apple. It says it's 45% of their holdings, but that's not right, and I'll explain to you why it's not. Bank of America, Chevron, Coca-Cola, a lot of names that you know. And you can see here they have about 54 separate investments. But what I want you to focus on is this over here. This is the list of the 70-some private companies they own. They just bought Allegheny Bank and Pilot Travel Centers. They bought those since January of 2023. And as I explained to you, they're very heavy into insurance. And please watch that 7-hour video and come to understand the insurance business. But here you see Ben Bridge. Some of these I don't know. Berkshire Hathaway Automotive. They own, I think he said they own about 35 automobile dealerships. Berkshire Energy. These are the companies that are sending profits to them on a daily basis. And this is what drives their company. Now I want you to show you down here. This is, again, something that I've created. This is the value, and it's updated on a 5-minute basis, the value of the stocks that they own. This is the cash that they have on hand. And then this is the value of all of their assets. And I got this from a Wikipedia website. So that gives me, all I have to do is subtract, and I come up with the value of their privately owned companies. And you can see the value of their private owned companies is bigger than the value of their stocks. Now, this is their earnings. And what you'll see here is they're coming up with, this is the earnings, and that's dividends off of the 50-some stocks. And this is the earnings off of their private companies. This is the money that's coming in at the rate of it's business days of $100 million per day. That's $291 billion in earnings that these companies produce. So if you look at that and say, okay, I have a manager who is collecting money on a daily basis and going out and finding companies to own. There's Duracell. We know what that is. That's the battery company. This is Geico Insurance. We know what that is. Shaw Industries. See's Candies. Yeah, he talks a lot about See's Candies, and they sit and eat peanut brittle and drink Coca-Colas for 7 hours. Kraft Heinz. Some names that you know that generate business, and they don't have the burden of being a publicly traded company. So they're actually more profitable because they don't have the regulations. They don't have. So I got a comment just today. I would rather own, and they gave me the ticker symbol for 2 Vanguard ETFs. When the markets get bad, and you redeem your ETFs, you force your ETFs to sell. As you force them to sell, you create a snowball that it continues to drop, roll down the hill, and that brings down the value of your 2 ETF. Warren doesn't sell anything other than he sold some Taiwan semiconductor because he didn't like the exposure to China. This is a no-brainer. This is going into my grandchildren's trust and I'm going to let Warren manage it, and I'm getting my portfolio up to where either Berkshire Hathaway or these stocks over here represent 50% of my portfolio. Let's talk a little more about this. Okay, so how can you profit off of this? I've done a series of videos on Berkshire Hathaway, and if you'll watch the video, you'll understand how they use insurance to collect your premium for your home, your fire insurance on your home, and then they take that premium, millions of dollars every year, and they invest it elsewhere. And if your house never burns down, you never collect. So they're getting free money from you to invest, and all they have to do is manage the risk against the payment. What's the chance of Kerry's house in Mountain Brook, Alabama, burning to the ground? Kerry still sends his monthly payment. More than likely, he will never collect. Never. It's the same, really, on most insurance. You have automobile insurance. He owns Progressive. If you don't have an accident, every month you're paying your premium. Warren's taking that premium and investing it and multiplying the return on it, and it's free money. Again, understand Berkshire Hathaway, and you will, like me, get 50% of your portfolio in either Berkshire shares or the stocks that they own. This guy's a genius. And he's 91 years old, and Charlie is 99. But watch the video. They know what they're doing. They've picked their replacements. They'll introduce you to their replacements. And all I can say is this is a company I want to get in bed with. All right, that's my take. I'll put a link in the description to where you can see CNBC's 7 hours of their annual meeting. It'll be some of the best 7 hours that you spend. Rather than go to Netflix and watch 3 series or 2 movies, go watch the Berkshire Hathaway annual meeting, and you'll come away a smarter investor. I'll guarantee that. I certainly have. I'll talk to you again tomorrow.